UiPath just reported the latest earnings report, a beat across the board for this quarter and for the guidance as well. Truly a nice growth company. The stock itself has already doubled actually since last year, since the lows last year. Right now, year over year, precisely date to date, stock is up 70.84%. At the time of making this video, the stock is up close to 10% right now with a market cap close to $14 billion. You're paying 8 times EV to sales right now, and these are the analyst expectations for the coming fiscal years. Of course, these are the analyst expectations right now. Expect them to change in the coming days. At the time of making this video, there are 23 analysts covering this company with an average price target of $25. And of course, with the after hours price action, the price target is now a bit lower than the actual price of the stock. Of course, after the earnings call, analysts will start to model out with new numbers, and then tomorrow you'll probably see new price targets because this was a pretty good print. Oh, and by the way, it has a forward PE of close to 50 times. So I'd like to start off with a comment here from the CEO. We delivered a strong close of the fiscal year with fourth quarter ARR growing 22% year over year to $1.46 billion, underscoring the meaningful outcomes our business automation platform delivers for our customers. The combination of UiPath's AI and automation is the strategic change enabler for our customers that makes any digital transformation easier and faster, while empowering customers to innovate, adapt more quickly, and grow. As for the CFO, the team executed well in the fourth quarter, and I'm particularly pleased with our significant year-over-year increase in operating margins, including our first quarter of GAAP profitability as a public company and record cash flow. Looking ahead to fiscal year 2025, this afternoon's guidance reflects typical seasonal patterns in the business as well as our plans to strategically invest to further expand our market leadership while continuing to drive operating leverage. All great comments here, especially achieving a first quarter of GAAP profitability as a public company. Huge milestone for them, so congrats. And it's not that they are suddenly not growing fast anymore, single digits. No, they're still considered a growth company while now being a profitable growth company. So congrats on achieving that huge milestone. Usually in these types of markets, we either see companies become profitable, but then it's at the expense of growing, or growing at the expense of being profitable. UiPath currently can do both. So again, congrats to them and congrats to all the shareholders. Now, before continuing, if you enjoy these type of videos, leave it a thumbs up, subscribe if you're not, would really appreciate that. Want to support me even further, do check out the link down in the description and in the pinned comment to get a top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's go over the numbers one by one here. Revenue of $404 million, that increased 31% year over year, with ARR, as we've seen, increasing 22% year over year. As for net new ARR, that was $86 million. Dollar-based net retention rate of 119%, which is a bit down from last quarter of around, I think, 122, 121% or so. GAAP gross margin of 87%, non-GAAP gross margin 89%, and then GAAP operating income of $15 million, with non-GAAP operating income coming in at $111 million. As for net cash flow from operations, that was $146 million, and they ended that quarter with cash equivalents, and marketable securities of $1.9 billion. Again, very stable balance sheet. If these things continue like this, we could probably expect, depending on the stock price, maybe some buybacks in the future. Now, for the full year of fiscal year 2024, they grew revenue by 24% year over year, net new ARR of $260 million, GAAP gross margin 85%, non-GAAP 87%, so Q4 was a bit stronger than that. As for GAAP operating loss, was $165 million, with non-GAAP operating income of $233 million, and net cash from operations of $299 million. Now, if we scroll down and we look at what's under cash flow from operating activities, you can look at net loss, huge improvement year over year, of course, for the fiscal year 2024. Still a loss here, but compared to 2023, clearly you can see here a huge improvement. As for stock-based compensation expense, yes, that increased year over year, but really not by much. As for repurchases of Class A common stock, for the fiscal year 2024, they bought back 102.6 million. Then with regard to the split in revenue, so that's between licenses and subscription services. So licenses increased 37-38% year over year, while subscription services increased 27-28% year over year. And then of course you have that small one from professional services and others, but that decreased year over year. Then with regards to cost of revenue, we can see that licenses cost of revenue has actually decreased year over year by around 14%. Subscription services though has increased 42.76% with regards to cost of revenue. So keep an eye out on that if that trend continues, because that has increased more than actual revenue from subscription services. And so overall total cost of revenue has increased 11% year over year, which of course a slower increase than overall revenue. That's why you're seeing here gross profit increasing quite nicely as well year over year for this quarter and for the full year. And so last thing here with regards to the graph on the weekly, we are now after hours over 25, close to $26 or so, which is exactly where we were back at the end of 2023. We got rejected there. Then we rebounded at around the 50-day moving average back then was $22. Went back up over that $26, couldn't really stay and got rejected just under $28. Right now, clearly in the last couple of weeks, the 50 and the 20-day moving averages were quite critical for this stock. Let's see what happens when the market opens. The 200-day moving average sits at $20.43. Overall, as you can see, since the lows here back in October of 2022, the stock did have higher lows, which was pretty bullish. And then we had that huge breakout at the end of 2023 with a nice earnings report. So overall, to conclude, another solid quarter by UiPath. They're doing exactly what they should be doing. They're growing, and now they're even growing in a profitable way. The stock has gone up quite a lot since the lows, as we've seen. But if they continue to execute like that, they can be huge winners in their field, and shareholders will be rewarded handsomely in the coming years. Of course, do share your thoughts down in the comments below. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye. Oh, and a small extra thing here for those that are still interested in Cathie Wood's Ark Invest portfolios. Across all portfolios, you can see that UiPath sits at the number 4 position under Tesla, Square, and Coinbase at number 1. Of course, Coinbase is at number 1 because the stock has literally exploded since the lows last year. The top 10 concludes with Roku, CRISPR, Robinhood, Zoom, Roblox, and DraftKings at number 10.